What is meant by the velocity of money? I'm Nate, I'm the FitFutureMD. I lost 30 pounds in 30 days. Make sure you pick up that free copy of the fitness and nutrition guide in the description below. I'm the owner of Ensorsale.com. Ensorsale is family. Together we can rise up from humble beginnings and inspire others with the messages on our t-shirts. Get you an inspirational t-shirt today, like the one I'm wearing right now. Generational curse breaker, because we're going to break those generational curses. So in this video I'm going to talk about, what is the velocity of money? Well, the velocity of money is if I invest this $1,000, how fast can I get that $1,000 back out, right? So, in business you kind of say, well, if I put $1,000 into a t-shirt, so say this t-shirt, Generational Curse Breaker, and how fast can I sell all these t-shirts and get my $1,000 back so I can re-up and do it again, right? So that's kind of the idea with the velocity of money, right? So on an investing level, that's like, so say I'm gonna put 100 grand into a real estate deal. How many years is that 100 grand gonna sit in that real estate deal before we either sell the property, I get the money back, or I refinance the property and get the money back, or bought out by other investors and get the money back. However, the plan, whatever plan is there is to get the money back, how long is that going to take, right? There's also a formula called the rule of 72, right? The rule of 72 is basically, if you get this rate of return, how long will it be to double your money, right? So you take 72 and you divide it by whatever rate you're getting. So the S&P 500 is average 12%, for as long as it's been around. So, whatever that math is, right? The easiest one is like 20%. That's 3.6 years, you're going to double your money, right? And, most people are trying to find that safe investment. So, anything under 12% should be as safe of an investment as you can get, right? But the reason we care about this is because when the government got into financial trouble, or the economy got into financial trouble, the government decided to start printing money, right? So printing money is an inflationary thing, right? So that meant that our money sitting in the bank was not going to make enough to cover inflation, right? So, and that's called quantitative easing. So it basically forced investors, forced people that did not invest in the stock market, that did not worry about retirement. Like, retirement could be you held onto a piece of gold, and then sold it, right? Or, whatever. Like, you basically hoarded money and kept it, right? Well now, since they're printing money, the value of that money is always going down. So to hoard that money is to always lose. Now we've just gone through a situation where every investment in every category has basically gone down, right, to some level. Or even real estate is slowed, right, because of a rising interest rate. So money is not as cheap as it was, right? Or loans are not as cheap. And what you're going to see is you're going to see people that overextended themselves, that were greedy. You're going to see them kind of suffer and go out of business, and you're going to see the ones that were responsible, they're going to buy those companies up. Or even, like all these big tech companies that expanded through all this, right? They started laying people off, where you're going to see people pick the best of those people up, and then all of a sudden they're ahead, right? So, but the purpose of money now is to spend it, right? And what we want to do is use the velocity of money to spend it and get it back, right? How fast can we get it back so we can spend it again, right? So if that's a stock, so I have stocks that I bought in 2020, and you know, they literally doubled up in 2020. So what I would do is I would sell half, which decreases your upside, right? So if you got a stock you think's, you know, for $5 and you think it's going to go to 150 one day. So like Tesla was like a $10 stock in 2012, and it got all the way to like 1,000, right? Same stock. But if you bought it at $12 and sold it at when it got to 24, half of it, you would half when it got to 1,000, right? So, but there's stocks like that all over the place, right? So Shopify, Netflix, Tesla, they were all, even Apple, really, they were all, you know, a lot cheaper than they are now at one point. And when you find those good companies like that, and you can buy them $1,000, $2,000, this is what I do, okay? It's not financial advice, but that's what I'm looking for. I'm looking for those stocks like that. I'm not looking to be safely invested in the S&P 500. That's what retirement accounts are for, right? That's what you do in your IRA, your Roth IRA, your 401k, like you go invest in the bigger companies and let them grow slowly over time. But you'll see that, so SIVB, the bank, just collapsed. It was an S&P 500 bank, right? They made one mistake, got a run of $45 billion. They didn't have the cash and they went bankrupt, right? So, you know, it can happen, right? And it can happen whether you put $1,000 into them or $1,000 into a smaller company that's got higher risk. So, you know, but you're doing both, right? And you're doing whatever you're able to gain knowledge in, right? So you don't do stuff that you're not interested in. You don't do stuff that you don't understand, right? So the reason so many people understand, or the reason so many people do real estate, is because real estate is the easiest one to understand. Somebody's got to have a home or a place to lay their head, right? And most people are, especially now, want to be nomadic. They don't want to be in the same place their whole life, so they rent a lot, right? So it makes sense to have a rental, and with the tax incentives for rentals, you know, it's better for the investor tax-wise. They don't give as many taxes to the government because the government wants you to provide housing, right? And that's a lot easier to understand for most people. Most people don't understand the intricacies and the insider information that you kind of have to have in the stock market. So they don't like the stock market. And then business is a whole nother animal, right? Like where to get funding, who to target. You got to be able to run whole teams, you know. So most people don't want to be in business for themselves, right? They don't want to be that person that does all this stress and then is the last one to get paid, right? So these are all things to keep in mind with the velocity of money, right? Let's say I'm trying to be able to spend that same $1,000 10 times, 20 times in a year, right? So I want to use that run up and get my money back. And you want to do the same thing tax-free in real estate. You want to do the same thing in stocks. You want to do the same thing. I want to do the same thing in all these categories, so that my $1,000 ended up being 10 grand or 20 grand, right? And obviously you could lose the $1,000, but you were going to spend that on cigarettes and beer anyway, right? So get rid of the cigarettes and beer. I'm Nate, the FitFutureMD. Check out the description if you're interested in anything down there. Shop at Ensorsale.com, and we'll see you in the next one. Peace.